In September, we saw a change in the Toronto resale market. The first time we've seen that change in the better part of 4 months. We hit a high point in the market in April, and then since April, particularly after the introduction of the foreign buyers speculation tax, 15% that was imposed by the provincial government on April the 20th, the market has continued to decline. There was a concern that this correction might actually be a crash, but September's results indicate that that is not the case, and in fact that we're seeing a market change for the better, and again for the first time in 4 months. We've been charting the process that the market has been taking, and this chart is indicating that there was a high point in April of $920,000 being the average sale price in the GTA. That declined to $732,000 in August, and then for the very first time, as I said, in 4 months, the market went up to $775,000 in September. So that's a nice change to that downward trend that we saw for the better part of 4 months. The buyers are clearly back, and they're demonstrating that by buying some properties that they weren't buying in the months leading up to September, particularly semi-detached properties and detached properties. Sales of condominium apartments were relatively strong through that period, but we didn't see the buyers purchasing the higher priced detached properties or semi-detached properties, and as a result of that, that is another reason why we saw the average sale price decline over the 4-month period from April through to September. The sales that did take place in detached and semi-detached properties drove the market up, and so we've seen an uptick in the average sale price. Notwithstanding those declines, prices in Toronto still are quite pricey. For example, in the City of Toronto itself, not counting the 905 region, average sale price for detached property in September came in at $1,355,000. Semi-detached properties were not far behind at $935,000, and condominium apartments came in at $554,000. If we were to look at average sale price for condominium apartments in the central core, where the bulk of the condominium apartments are located, we'll see that they're actually selling for approximately $615,000, also slowly but surely edging up and becoming fairly pricey. When one considers other cities that are actually having a strong market, excluding Vancouver, specifically referring to Montreal, prices in Montreal are practically half of the prices that I just indicated. Average sale price in Montreal is around $350,000. As I indicated earlier, our average sale price is $775,000, almost half of that. So prices are still strong in Toronto, notwithstanding the decline that took place, and now that decline is changing and we're seeing an upward tick. I think some comment needs to be made about supply, because there has been a little change in supply over that period of time. We now have more properties than we did in the spring, and that's giving buyers more choice. And as a result of having more choice, they're taking more time, and so we're seeing the days on market for properties extending. In September, we saw 16,000 new properties come on the market for sale. That compares to 15,000 that came on the market last year, an increase of over 9%. At the end of September, in terms of active properties, in other words, the inventory available for buyers to purchase, we're up to 19,000, which is almost stunningly 69% higher than the 11,255 that we had a year ago. So clearly a lot of choice for buyers, particularly on a year-over-year basis. So as a result of that, it's not surprising that the months of inventory has gone up. On a 12-month running average, our months of inventory is around 1.6 months to 1.5 months. But if you just look at September's results, months of inventory is probably closer to 3 months, which I think is a more accurate indication of where the market currently stands. It's important to look at the inventory levels in September, because they're an indication of where the market is going to be going for the rest of the year. In September, we saw new listings come to the market slightly over 16,000. Last year, new listings that came to the market were approximately 15,000, which is an increase on a year-over-year basis of almost 10%. Where we have a dramatic difference this year compared to last year is the total inventory. That is the inventory of available properties for purchasers to view and ultimately to buy is now 19,000 plus. Last year at this time we had 11,000, an increase of almost 69%. It's a dramatic increase. And of course that gives buyers an opportunity to be more selective, and at the same time we don't see the frenzy that we saw last year of multiple buyers competing for the same properties. The other thing that needs to be commented on as far as where the market is the fact that the market is not operating on a homogeneous basis. There's a distinct difference between what the 416 trading area is doing and the 905 trading area is doing. We see the volume of sales in the 416 is higher than the volume of sales in the 905. The average sale price has declined again from that peak in April, much more so in the 905 than it has in the 416. And similarly, the days on market has increased more dramatically than in the case of the 416. If we look at the volume of sales in the 416 as opposed to the 905, the volume of sales in the 416 is down by 29% compared to last year at this time, whereas in the 905 the volume of sales is down by almost 40% compared to last year. If we look at average sale prices, the average sale price in the 416 compared to last year in September is up by almost 10%, whereas the average sale price in the 905 is only up by about 6%. So quite a distinct difference in the case of the 905 and the 416 with respect to the volume of sales and the average sale prices year over year. And if we look at the days on market for the 416 is currently about 21 days, whereas the 905 it's about 28 days. So it's taking longer for properties to sell in the 905, and it's taking longer because there's more properties available for buyers in the 905, and at the same time we're seeing the average sale prices decline more dramatically in the 905 compared to the 416. Overall, the market was down and has continued to stay down. This is the fifth consecutive month that has happened. Overall, it's down 35%, but again, distinction has to be made between how much it has declined in the 905 as opposed to the 416. The decline in the 905 is much more dramatic than it is in the 416. In terms of the absolute numbers of sales in the overall, there were 6,379 sales that took place in the month of September. That compares to 9,830, and as I said, on a percentage basis, that's down by about 35%. Looking forward, I think that every indication that the market is going to continue to improve, and even in the 905, it will definitely continue to improve in the 416. I think, though, the improvement will be modest in the sense that average sale prices will increase more consistently with what's happening in terms of wages, so somewhere in the neighborhood of 3 to 5%, as opposed to the kind of stunning increases that we saw from January through to April that were in excess of 30%. Those could not be sustained. The concern that we have going forward in terms of the market is what the Bank of Canada will do with respect to interest rates. We've already had 2 interest rate hikes in the last 4 months. There's also the concern about what the Office of the Superintendent of Financial Institutions is going to do. They're talking about implementing some additional stress testing. Specifically, currently you don't need any stress testing with respect to buyers that are looking to finance their purchases and have contributed more than 20% equity. Superintendent would like stress testing even in those cases. So even a buyer that is contributing 30, 40, 50% of the purchase price and looking for a mortgage that may be only 50% or 60% of the purchase price will be stress tested on the bank rate, which might be 2% higher than the actual rate that they'll be paying. That will clearly have a negative impact on buyers and a negative impact on the market. Clearly something that isn't necessary at this point in time, because the market has, in my opinion and the opinion of other economists, kind of stabilized and is moving now in a more balanced and stable fashion. And that stress testing may have a negative impact. But that aside, I think the market will continue to improve, and we'll see these moderate gains in prices and moderate gains in sales. So we look forward to seeing October's results to see if they're consistent with what we saw in September.